One of the very few new additions to my portfolio in the past year was Waste Management Incorporated, stock ticker WM, and since then the stock's done really well. Over the past year, it's up around 32%, and we can see the company's trading at $207.69 per share. And if we jump over to my do-it-yourself investor toolkit and blow up my growth chart, here you can see Waste Management. I'm currently up around 34.35% on this position. Now, if we look at the company year to date, we can see they're currently up around 15.96%. And if you've been keeping up with the news, Waste Management had some pretty big news just a few months ago earlier this summer. They announced they're looking to acquire Stericycle, who is a leader in medical waste services, for around $7.2 billion. Now, if we scroll down, we can basically see that means Waste Management is looking to acquire all outstanding shares of Stericycle for around $62 per share. Now, what's interesting is if we look at Stericycle over the past year, it's up massively, around 33%, and right here is when the news of Waste Management's acquisition took place. At the time, they were trading at around $45 per share, and of course, since they're looking to buy them for around $62 per share, they shot up close to that share price, but they didn't quite get there at the time. They were trading at about $59 to $60 per share. Now, why is this? Why didn't they go all the way up to $62? Well, we have to understand, this acquisition still has to get approved. And we can see as this was closer to getting approved, the company jumped up to around $61.70 per share. So it started getting very close to $62. But if we look at just the past 5 days, we can see it looks like there was just a little bit of a sell-off. So what's going on here? Well, we can see over just the past week, Stericycle fell as Canadian regulator extended the review of the Waste Management deal. Now, this doesn't mean the deal's not going to go through, but it did probably scare investors just a little bit. If we start to scroll down, one of the things that we can see is Stericycle continues to anticipate completing the transaction as early as Q4, which we're coming up on pretty quick. Now, whether or not that'll happen might be up to regulators. Now, how will this acquisition overall help Waste Management? Well, like I stated earlier, in total, it'll cost them about $7.2 billion. So let's put that into context. So to put that into context, if we jump over to my dividend breakdown sheet, and like always, you can download any of my spreadsheets and also get access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet by going over to tickerdata.com. There's a 7-day free trial. But if we come up here and plug in WM and hit enter, we will touch on these dividend metrics in just a moment, but I want to talk about the free cash flow first. If we come over here, we can see that 2023 free cash flow for this company was sitting at about $1.8 billion, in 2022, $1.9 billion, and in 2021, sitting at about $2.4 billion. So again, this acquisition is $7.2 billion. So the acquisition comes in right at 4 times their 2023 free cash flow. So this is a pretty aggressive acquisition, but acquisitions aren't anything new to Waste Management. Actually, we can see if we look at their capital allocation history from 2019 to 2021, we can see the number one way they used their free cash flow was to reinvest back into the business. They used around 36% of their free cash flow to do so. We can see dividends came in at about 19%, stock buybacks at around 13%, and then mergers and acquisitions at a 32%. That is quite a bit higher than most companies. So this is something they're actively pursuing. They're looking for opportunities for growth through mergers and acquisitions. And Waste Management claims that the end goal for the planned acquisition will be to position Waste Management to offer customers an increasingly comprehensive suite of services as the leading environmental solutions provider in North America. Stericycle's business functions include waste collection, management, and disposal, all of which are well aligned with Waste Management's core business and capabilities. So this acquisition does make sense as long as it's done at the right price. Now, like we saw earlier, it does look like Waste Management is paying a premium. They're paying a 24% premium over a 60-day volume weighted average price as of May 23rd, 2024. So like we saw when we were looking at the share price of Stericycle, if we zoom out again, this is around a 24% premium compared to how the market was valuing the company. Now, what we do need to take note of is Waste Management does intend to finance the transaction using a combination of bank debt and senior notes. And following the transaction, Waste Management expects a leverage ratio of approximately 3.6%. So this makes me wonder, how healthy is the balance sheet? And we can analyze this with my balance sheet breakdown sheet. We'll come up here and plug in WM. And if you've watched my channel before, something that probably pops out to you is the current ratio is sitting at 0.9, and typically this is a big red flag for me, because current ratio tells us how easily a company can meet their short-term obligations, and all it is total current assets divided by total current liabilities. And we want to see this number above 1 typically, but for Waste Management, it is actually sitting at 0.9. But what you have to understand is Waste Management operates in a very capital-intensive industry. So this is actually pretty common for companies like Waste Management, and if we look at the past decade for Waste Management, for the most part, they typically have a current ratio of below 1, sitting close to usually around 0.9. And they're actually a little bit higher than they've been over the past couple of years. So this doesn't necessarily scare me as much as it normally would for most companies. Looks like the debt to assets ratio appears to be in a decent range, and it's been sitting in that range for the past decade as well. So overall, I think the balance sheet looks decent. So again, Waste Management is actively pursuing these acquisitions, and I think they're pretty hopeful with Stericycle moving forward. Now, if we go back and look at the company more from a dividend perspective again, this is what I really care about a lot because my long-term goal as an investor is to one day live off dividends. We can see the company has a low starting dividend yield, sitting at just 1.44%. But what you have to understand about Waste Management is they have some of the most predictable dividend payments out there, and the dividend growth is very predictable as well. We can see decent 10-year dividend CAGR at around 7% and the 5-year close to around 8%. So from 2013, they went from around $1.46 to in 2023, $2.80, and are now sitting at about $3 per share. So the dividend growth has been good, it's been stable, it's been predictable, which is exactly what you would expect out of Waste Management. Again, you have to understand when it comes to Waste Management, this is a very recession resilient company. And this is actually something they boast about in their investors presentation. We can see here, 75% of their revenue has annuity-like characteristics. So basically it's recurring revenue. It makes their streams of income very predictable, which is great if you're someone looking to live off dividend income. You don't want those dividends to get cut. And the industry that Waste Management operates in is obviously not going away anytime soon. Now, if we look at the health of those dividends by looking at the free cash flow payout ratio, we can see it's ranged from anywhere around 40 to 60% over the past decade, which is pretty much in line with where management wants it. Now, if we jump over to our stock screener for Waste Management, again, what you're going to see is steady but predictable growth. Even when we look at revenue per share, free cash flow per share, and earnings per share. Like we saw earlier, the company does use some capital to buy back shares. Debt to assets ratio hasn't changed too much, and for the most part, return on invested capital typically stays pretty close to around 10%. If we jump over to the profitability sheet, we can see not too much changes with the gross profit ratio over the past decade. The 10-year average is sitting at about 37.4, while in 2023 it sat at about 38.28, so a nice little boost overall, but pretty close to that 10-year average and pretty close to that 5-year average. So again, the story behind Waste Management is investors love them for predictability and reliability. It's considered very recession-proof, but that doesn't mean Waste Management isn't taking steps to continue to have growth in the future, even without acquisitions. And this is actually something I was writing about on Seeking Alpha not too long ago. They've taken 3 main steps to continue to innovate as a company. Number 1, they're exploring autonomous trucks. 2, they're looking at smart containers. They're deploying sensors that optimize collection routes and predict waste volume. And this is going to lead to efficiency gains. And then lastly, and perhaps most importantly, they're focusing on data-driven insights. They're utilizing data to personalize customer service, identify cost-saving opportunities, which is probably one of their best opportunities, and optimizing pricing strategies. And like I said, the initiatives might seem incremental, but the cumulative impact over a long period of time could be substantial. Now, with all this being said, with the acquisition going on, with their focus on future growth, is Waste Management currently a good stock to consider buying at $207.69 per share? To answer that question, let's go ahead and jump over to my stock valuation spreadsheet, and again, we'll come up here and plug in WM. And again, thanks to ticker data, all this data is going to automatically load in. Now, in the case of Waste Management, there's 3 main valuations that I want to look at, but first off, I want to point out the beta again. We're looking at a company with a low beta, just sitting at 0.75, so you should see less volatility than that of the market, which is another reason that investors actually like this company. We're talking about low volatility, recession resilient, predictable streams of income. Depending on your goals as an investor, those all sound like really great things. Now, the first valuation we'll look at is going to be our discounted cash flow analysis, and this is actually going to be interesting for Waste Management because we can see even with future free cash flow growth rate of around 12%, after adding those future free cash flows, adding cash and cash equivalents, subtracting out total debt to get equity value, and dividing by shares outstanding, we come to a DCF price per share of just $116.80. Pretty interesting because that's quite a bit lower than the current trading price, but let's keep moving forward. If we look at the multiples valuation for this company, one of the things we'll notice is if we look at these 3 comparable companies, they all have pretty high price to earnings multiple, and Waste Management really isn't too different. If we look right now, we can see their forward price to earnings sitting at 28.53, and if we look at it historically here on Seeking Alpha, look at the price to earnings non-GAAP forward looking. It's pretty much in line with what their 5-year average is, so typically this company trades at a premium, probably for all the reasons that I've mentioned earlier. So the average price to earnings multiple for these three companies is sitting at about 44, but actually in this scenario, we want to take the median since we have a little bit of an outlier here with Waste Connections. But if we apply this median price to earnings to Waste Management, we come to an intrinsic value of about $212.71 per share. Now, the last valuation we'll look at is going to be our dividend discount model. And again, this values a company based on how much they're paying out in dividends and how much that dividend is growing over time. So in this scenario, I'm projecting a dividend growth rate of about 6.5% for Waste Management. And keep in mind, it's a little bit lower than the 10-year and 5-year dividend CAGR for this company. So I do think it's very attainable. But with the discount rate of about 8%, we come to a dividend discount model price per share of $213, which is just a little bit above that current share price. So finally, if we jump over to our output tab, we can see the three valuations that we use in this scenario. If we average them all three together, we come to an intrinsic value of about $180.84. You can see we got quite a few differences here, so I do think it's always important to look at multiple valuations because none of them perfectly account for all of the business practices. But the current price of the business is sitting at about $207.69, so we're looking at a difference of about 15% between the intrinsic value we found and the current share price. But like always, we want to apply a margin of safety. So with a 10% margin of safety, it looks like our acceptable buy price is sitting at about $162, and with a 20%, sitting at about $144 per share, so we're not currently getting a signal to buy right now. But here's what you have to understand about Waste Management. If you're someone looking to buy a company at a really good price as of right now, I'm not necessarily sure that Waste Management is the best value. Again, yes, I did buy this company a while back, and you can see the video where I did that if you scroll through my videos, but at the time it was around $150 to $160 per share, which as we can see is actually pretty close to what our acceptable buy price is, especially with a 10% margin of safety. So the company's a little more expensive right now, just like most stocks on the market. But with that being said, if you're someone who wants very predictable, very stable, and a very reliable growing stream of dividend income, Waste Management is a pretty good option. I think we can feel confident, despite how the economy performs over the next 5 to 10 years, those dividends from Waste Management are going to keep coming in. They're growing organically, but also seeking out strategic acquisitions. And as for me, I'm someone who's looking to one day live off dividend income. I'm not planning on adding more shares of Waste Management right now, but I'm perfectly happy continuing to hold this company and reinvest those dividends back into my portfolio. And I'm not at all surprised with the news constantly talking about the potential for a recession in the next few years that Waste Management is trading at a premium right now. This is the exact type of stock that investors love to buy up when those talks are going on. So go ahead and let me know what you think of Waste Management in the comments down below, if you plan on buying or selling, or if you think it's overvalued or undervalued. And like always, if you'd like to download any of my spreadsheets and also get access to the Ticker Data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.